much, Shandan, and thank you, Shalini, for inviting me to be with you today with this very interesting webinar on the subject of sustainable finance. I'm very happy and glad to be able to share some of the expertise that we have at the Luxembourg Stock Exchange, and more precisely at the Luxembourg Green Exchange on this topic. I don't really remember how much time I do have, but I've prepared a couple of slides that I would like to share with you. So maybe I will share my screen and I will start my presentation. Yeah, I need just to have some rights to share the screen, maybe from Shalini or Shandan. While they're doing this, today I will be actually talking about one aspect of the sustainable finance universe, the aspect in which we at the Luxembourg Green Exchange are mostly specialized. I don't know how much do you know about us. I hope that the participants have done some research before joining the webinar, but I will leave also to my colleague Nishit later on to introduce the Luxembourg Stock Exchange and the Luxembourg Green Exchange. So we are specialized in what is now known worldwide, the green, social, and sustainability bonds. And today in my presentation, I will try just to give a bit of idea, an overview, let's say, on these debt instruments widely used today to raise capitals from, to raise funds from capital markets and to use them towards sustainability purposes. And I will try to focus a little bit on the Indian market, of course, without going a lot into details, to leave also to the other speakers to bring their expertise in other aspects of this field. So the green bonds or the social bonds or the sustainability bonds or even the sustainability linked bonds are debt instruments which can raise funds from the capital markets and channel these funds towards sustainability purposes. When we speak about green and social and sustainability, right away we should think about where to use the funds or where to use the proceeds coming from these bonds. And in the case of green bonds, it's quite easy. We use them in green projects or climate-related projects or environmental projects, any project that can help in reducing the CO2 emissions, adapting to climate change, and providing benefits from an environmental and climate point of view. While for the social bonds, we use the proceeds in dedicated social projects, our projects where you have social impact. And in the case of the sustainability bonds, you can join both impacts, so the green and the social one, in some of the projects where you have, both benefits. These are the main instruments that that we hear about at the market. However, I'm sure that most of you, the participants who are close to the field of sustainable finance, have heard about different types also of bonds. I'm sure that you have heard about SDG bonds or the Rhino bonds or the gender bonds or the blue bonds. I mean, you have a kind of rainbow, I would say, of colors when it comes to these instruments. The most important thing we believe in the market is that once you hear about a similar bond, try to understand what is behind the use of proceeds. And if the use of proceeds at the end goes to finance environmental related or social related or sustainability related projects, then you can classify those different types of bonds under one of these three main categories that we have in the market. Maybe to give some idea about the history, because this market, it's quite new. The very first green bond that was issued in 2007 by the European Investment Bank. That is, just by coincidence, is based here in Luxembourg, where Nishit and myself are based, or where the Luxembourg Stock Exchange is based, actually, where we work. And the main idea EIB brought to the market at that time is that they wanted to raise funds through a debt instrument, and they wanted to use the funds in two dedicated types of projects. And at the time, they were renewable energy and energy efficiency projects. So they didn't want to use the funds in any other type of project, and they didn't want to use the funds in the general corporate purposes. They wanted really to finance dedicated project. And that was the beginning of the concept of the use of proceeds that we have in the market today. Now, the EIB, when they issued their instrument in 2007, they called the bond, the instrument itself, they called it climate awareness bond. So it wasn't really called the green bond at that time. And 1 year later, 2008, the World Bank issued the very first titled green bond. So they issued a debt instrument and they titled the instrument as green bond. And that was the very beginning of that market that was, that was developing very rapidly at that time, because other IFIs or NDBs, they took the idea and they tried also to raise funds from capital markets through the same concept. So the market was dominated at the very beginning by IFIs and NDBs and other similar type of institution. And the capital markets took like 7 years to provide the market with dedicated guidelines, let's say, how issuers of these instruments should issue the instruments and for what purposes and how. And this is what we call the green bond principles, which appeared in the market in 2014 by ICMA, the International Capital Market Association. And the market did not stop at this type of instrument. As you can see, we started with green, but then little by little other instruments came. So we started to hear about social bonds, about sustainability bonds, and the ICMA provided the market also with the dedicated guidelines or principles for issuers to follow. Now in 2020, there was a big change in the market, because after almost like 15 years of using or applying the concept of the use of proceeds through these 3 types of instruments, a new instrument came to the market, which has nothing to do with the use of proceeds concept. It's a general corporate purposes instrument, and it's called the sustainability linked bond that appeared in 2020. And the market was very much recipient actually for this instrument, to the extent that the ICMA provided right away guidelines for issuers to be able to issue this type of instruments. Definitely the development of the market continued after this, because now in 2020, 2023, we can also, we've started also hearing about maybe dedicated principles or guidelines for blue bonds. A lot of initiatives around the world have started also to tag dedicated bonds with dedicated purposes, like the gender-focused bonds or other types of bonds. So the market is really developing when it comes to using debt instruments to raise funds for definitely by EIB up until today. And for the interest of the participants, if you would like to look at some of the guidelines I've put here on this slide, all the dedicated guidelines or principles, let's say, provided by the International Capital Market Associations for the issuers, in order to understand how to issue, but not only how to issue the instruments, but also what to finance through the instruments, because it's very important when we speak about the use of proceeds concept, is to follow a certain procedure to make sure that the issuance is aligned with those principles in the market, so to provide the market with the confidence needed, and for the investors who are investing in those instruments, the confidence needed to be sure that this instrument is solid, this instrument is an instrument in which they can invest, and they trust that the instrument will bring the environmental or social benefit from it. This is why issuers have to follow a kind of a very strict, let's say, procedure when they issue the bonds, which is a little bit different from the plain vanilla bond, let's say. So there is a little bit of work that issuers should do extra in order to make sure that the instrument is really solid. And these are the 4 pillars that they have to follow the use of proceeds. So they have to explain where they will be using the funds, 100% of the funds. Then they have to say how they will select the project that they will invest in, and how they will monitor the proceeds, so the allocation of the funds, and what type of reporting, on how they will do the reporting on post issuance in terms of the allocation and the impact reporting. Let's have a look on how much big the market or how much small the market is. Very quickly, if we take each instrument from these four that I've mentioned to you, and we look at this, we go back a little bit in the time since 2015. We start with 2015 because, as I said, in 2014, the ICMA provided the principles or the guidance. That was the beginning, actually, of the market to to grow in a kind of structured way after having concrete guidelines in the market. And you can see that the market was continuing to develop since 2015 up until today. 2020 wasn't a very good year, but as we maybe all know, it wasn't a very good year for the capital markets in general, so not specifically for those instruments. This is why we have a bit of decline. And up until the first half of this year, of 2023, we have, I think, the issuances of these instruments, the green bonds, is meeting the expectations, at least for the first half of this year. And if we look at the same for other instruments, we can also see that social bonds were somehow developing between 2015 up to 2019. Not similarly to the green bonds, but the big development took place actually in 2020 and 2021. You might be asking yourself a question, and actually it's because of COVID or Corona, because those instruments were highly used by different issuers, not only IFIs, but also corporates, to raise funds in order to mitigate the impact of the social and mainly the social impact, let's say, of COVID-19. So they were the proceeds were invested in medical research, medical equipment, creating jobs, and all of these type of projects in order to mitigate the impact of COVID. And the same exactly with the sustainability bonds. They were following the same, let's say, behavior of development before 2019. And again, in 2020 and 2021, there was the peak of their issuances, because there is this social aspect also in the sustainability bonds, where they were highly also used for COVID-related matters. And if we take the sustainability linked bond, which is an instrument that has nothing to do with the use of proceeds, it's an instrument where you use the funds for general corporate purposes. And here you need to ask ourselves the question, so where is sustainability in this? The sustainability is that you as an issuer, you have to have sustainability targets, and you need to achieve them. And you will use the fund that you will raise through these instruments actually to make all the transition, to make all the changes that you need within your company entity, let's put it like this, in order to achieve these targets. So you don't have an obligation in these instruments to use the funds in dedicated green or social or sustainability projects. You can use them for general corporate purposes. However, you have to be committed to some sustainability targets. And if we look at this at the development of this instrument since 2020, it's a very new instrument. You will see how rapid the growth was up until the first half of this year. A lot of companies, issuers from all around the world run into this instrument because it provides new opportunities, actually, without being tied, as we said, to the concept of the use of proceeds. This is an overview of the issuance of the sustainability-linked bonds around the world. And, well, Europe is leading by the number of issuances and the number of issuers. However, Asia is taking a second place in the number of issuances of these instruments and the number of issuers. And now, if we put those four instruments together to have this general overview on the debt instrument when it comes to sustainable finance, this would be the chart in the development of those instruments in terms of amount issuances and in terms of the number of issuances. You can see that it's really developing. And if we just forget about the fact that 2022 was not a very good year in capital markets in general, we see that the trend is really in development. allow me to just focus a little bit on India when we speak about these issuances. Well, India is the sixth largest issuer of green, social, sustainability, and sustainability-linked bond, and also transition bonds. Maybe I won't speak about transition bonds today. We don't have that much time. It's the sixth largest issuer in the Asia and Pacific region. So far, we have 29 issuers, issued 73 bonds, and they raised almost 22 billion euro from those instruments. I've mentioned a couple of names of the top issuers, like the Indian Renewable Energy Development Agency, the Nagar Nigam Ghaziabad, the Renew Power Limited. But you can look at all of these actually on the on the literature on this. Most of those green and social and sustainability linked bond issued in India, they were focusing, well, mainly the green bonds, they were focusing on financing renewable energy projects, or let's say energy related projects, which is a trend that matches what happens in the world. Most of the proceeds coming from the green bonds specifically went to finance energy related projects. And this is very logic, we would say, because if you need to reduce your CO2 emissions, you need to focus on the most emitting projects, most polluting projects, and the energy sector is one of the most polluting projects. So 45 bonds out of the 71 that we have in India actually are financing renewable energy related projects. Most of these bonds issued by India, they were issued in US dollars, but also the second currency, I would say, is the local currency. So you see, we can issue those instruments in different currencies and we can use the proceeds in different ways. Most of these bonds, I would say, they tend always to show how much they contribute to the SDGs. And this is very important aspect of these instruments because they help actually in achieving the SDGs. And in the case of India, if we look at what is the trend, and since most of the bonds are financing renewable energy projects, the SDG number 7, the SDG number 13 and 11 are the most visible ones, I would say, because these are energy related or climate related, environmental related targets or objectives. Here on this slide, you have different examples about social bonds issued by different issuers in India, or sustainability bonds, or even sustainability linked bond. I'm sure that the participants, you have heard about Adani, for instance, the Axis Bank, the BNK Capital Co. All of these issuers, all of these entities actually have tapped already in the market of these instruments in different ways. And most of these issuances, they follow the international guidelines. So the ICMA guidelines, which is a big, let's say, passport for international recognition. And I'm really sure about that you have heard about the sovereign green bond that was issued by the government of India at the very beginning of this year, 2023. That was a big event, I would say. It's a big news because when the sovereign comes with an issuance that provides, let's say, the example for the private sector to lead and to follow the lead. Well, in the case of India, the sovereign came a little bit after the corporate or the private sector, but nevertheless, there was a big issuance of green bond in India. It was oversubscribed like 4 times, and the proceeds, as per the framework of these issuance, will go to, again, as we can imagine, solar and wind, so energy related, water, agriculture, green hydrogen, the metro lines, and the afforestation in India. Important to say that all of these issuances in general should be also kind of, I would say, verified by external entities. And in the case of India, there was a Cicero who provided an external review to the framework of this issuance of the government. Now, looking forward, and since this was a success story, let's say, for the sovereign issuance and for the corporates who issued those instruments in the past. What we, and I think the market also is looking forward for, is that this very first issuance, sovereign issuance, should not be the only one. There should be actually a program in place for further issuances of GSS bonds. So to repeat, let's say, the issuance, not be a standing alone issuance. We need also to encourage the domestic issuances of those instruments. Some regulations should be put in place in order to encourage the corporates, financial and non-financial ones, to tap into this market. We need also to clarify locally what are the green projects or the social projects in which the issuers can invest. So here we're talking about maybe the need to have a taxonomy, or to look at the taxonomies that exist already on the international level and to try to align also with them. Definitely, we need to build the capacity for public and private institutions when it comes to not only this maybe subject, which is, you know, very particular subject in sustainable finance, but we need to build the capacity in sustainable finance in general. And if this would become a trend in India, I mean, issuing those instruments in India, then we need also to attract international investors. The issuers need to look at not only the local market, but also the international markets in order to attract capital to the Indian market. And I will stop here for my presentation. I hope I didn't take that much time. I'm very happy to answer questions. Later on, I think they will have some time for a question. Thank you for listening to me.
Thank you. Thank you, Paul. Thank you so much for these deep insights about what exactly it is. And with this, I think the participants will be able to understand that what will happen if they really attend the training program that we are coming up in October. So here, I'll just put an information to everybody that we are having a training program on sustainable finance that is divided into 3 modules, and it's spread over all through the October. So if you want to see more details, have a look on the chat box, where there you will find the brochure of the training program, and also you will find the registration form, which you will be able to download it from there. Else, you can also send the email to us, and it is all over on our social media also. You will be able to find it over there. It's also on our website, krystal.in, academic page. So available for, and it's very much downloadable from there also. But Paul, thank you for giving this insight. And with this, I really am so excited about the upcoming initiative that Luxembourg Stock Exchange is taking up here for Indian businesses and Southeast Asian and Middle East businesses overall for this continent. And over to you, Chandana, who is the next speaker now.
You're on mute, Chandana.
Chandana, you are on mute. I will just unmute yourself.
Okay. 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 Yeah, Shalini Sharma, Director Crystal is an ESG expert with 17 years of experience in sustainability domain. Dr. Sharma is doctorate in environmental sciences with a major expertise in environment, management, and policy. She is the Humboldt, Columbia, and Oxford University alumna. Her organization Crystal is a winner of various awards like Digital Women Award from the She People, TV Swachh Bharat Grand Challenge Award from the DIPP, Government of India, Global SDG Award from RFI UK and DDCAP, Abu Dhabi. Crystal has partnered with Luxembourg Stock Exchange, Luxembourg Green Exchange, Europe for operations in sustainable finance domain that included sustainable bonds and related aspects. She achieved global recognition from World Economic Forum and Nasdaq Entrepreneurial Center, USA, for her innovation and circular economy and sustainable finance. Over to you, Shalini.
Thank you, Chandana. I was not thinking that you're going to read so much. So that's okay. Thank you. I'll just take you a little bit of insight, or maybe many of these participants here, what I can understand is there's a little bit of thought process that what exactly the sustainable finance is, and how it is different from the other normal finance or normal investment. So if we just see for everybody's understanding, the sustainable finance is something revolved around making the ethical decisions in the realms of business and investment. It centers on upholding the environment, social, and governance standards, particularly into the asset management and the corporate strategy, which are increasingly demanded by the customers, employees, investors, and every new investment. If you see, even from the startups, the investors are expecting that the ESG should be the core, in the center when they look for the investment. And by facilitating a shift towards the responsible growth and by channeling the investment into the global movement towards the sustainable production and services, sustainable finance play a pivotal role in reshaping both the economy and the society. Now, the people who are thinking about what is environment, social, and governance impact assessment, a bit of line about that is that it is in the short form. If you see a terminology that is in vogue nowadays is known as ESG. And everybody's talking about the ESG reporting, ESG-based investment, ESG mandates, and the circulars that are coming out from the regulatory authorities here in India. So ESG is a set of regulatory actions that is crafted to foster the sustainable and accountable business practices. So environmental aspect encompasses a spectrum of concerns like climate change. There is pollution, resource depletion. It talks about the waste management. It talks about the benefits to the employees. It talks about gender equality and various aspects into the ESG area. Since May 2021, as we must have already noted, that SEBI has mandated top 1,000 listed companies to submit their ESG report annually. ESG report encompasses both the qualitative and quantitative data that is concerning to the three primary areas. That is environment, which is all about the measurement that a businesses take to contribute to the environmental well-being. Second is social, that highlights the company's initiative aimed at enhancing the life of the people, the public and society around their businesses. And third is governance, that describes the organization's proactive stance against the corruption and its efforts to ensure the long-term sustainability of the investment. With this, I will take you to the brief of the training program that is coming up here for the Indian subcontinent. And I would like to share a brochure of the training program that is coming up, that is here for all of us. With this, I take pride sharing that we have partnered with the Luxembourg Stock Exchange, especially the WING Luxembourg Green Exchange, that is more active into the training and capacity building on the sustainable finance. This brochure you will find into the chat box also. There's a little bit of introduction. And then there are the three key training modules that we are going to take up in October, 3 different weeks, 2 days every week. Anybody who is interested into the course will be able to join the whole course if they want to, or if somebody want to just join the one module out of these 3 modules, that option is also open for everybody. So the first module is about the introduction of sustainable finance. It speaks more about the basics of sustainable finance and what exactly it is. Second is sustainable bonds market principles and taxonomies. It is more for the organizations who are looking for how to operate in this area and how to initiate trading, and what are the possibilities here in India and abroad, especially in Luxembourg Stock Exchange and Europe, and what are the requirements for the businesses to align themselves with the European taxonomies to get to the level of the trading. And then third is sustainable bonds ecosystem, which will tell you more about all the different type of bonds. There is social bond, there is climate bond, there's carbon bond, and there are various things that we will talk about in this module. So in this brochure, you will find various details, and it is there already in the chat box. You are having access to it. And along with this, we have provided almost all the details that this course is going to cover in around 7 days across the month of October. That means 3 weeks in October. So you can download it very well and have a look on more details. What are the benefits that you're going to get out of it is more about that you will be able to gain the knowledge that is more at the operational level. It's not only the awareness program, but it is more something that will enable you to operate in this area effectively. One very important hitch when we were talking about the organizations in Middle East, and they are very, and not only Middle East, even in Southeast Asian countries, they are very keen in having this kind of modality. And I will not hesitate saying that some of the countries, even they are interested to have the wing of Luxembourg Green Exchange in their country. And the key issue what we see here is that every country is coming up with their own exchanges, but how there will be interoperability is a bigger issue. How to standardize the methodologies. When we saw the first example that UNFCCC, they initiated the carbon credit mechanism, it was something at the global level and which everybody was following the same standards, same methodologies that are there on UNFCCC. But now countries, when they are coming up, every country will try to define their own methodology and own set of standards. When we see different companies, especially the multinational companies who are operating in different part of the world, I think for them, the seamless standardization is very important, which they will be looking into. And I think the Luxembourg Stock Exchange is already having that kind of knowledge, which that they can serve the various continents across the world. So with this, I leave it to Chandana for taking us to the next speaker. Here is the registration form. Please download on the chat box and please do connect with us on academy@crystal.in.
Yeah, thank you, Shalini. Thank you. I'm honored to welcome Mr. Rajiv Kumar, is a JM Small Industries Development Bank of India. Mr. Rajiv is a part of Green Climate Finance vertical of SIDBI, which is actively engaged in greening of MSMEs. He has executed several multilateral, bilateral programs on financing energy efficiency, renewable energy projects in MSMEs. In the past, Mr. Rajiv has worked closely on microcredit financing of innovative technology, startups, climate change, and sustainable development in MSME sector. Over to you, Mr. Rajiv.
Good afternoon, everybody. So thank you for having me here. A very nice presentation made by Paul with regard to green and sustainability bonds, which Luxembourg Stock Exchange is doing. Really very glad to know the good work they have been doing. I have a deck of presentation. I would like to upload that, share that my screen.
Yeah, you have right to
Yeah,
share.
I can do that.
Yeah.
Can you see my screen now?
Yes, it is visible. Yeah.
Okay. So I'm representing an organization called SIDBI, Small Industries Development Bank of India. So uh, actually, as a country, we have set a very ambitious target for us to become to achieve net zero target by 2070, and in the interim, by 2030, we will have also set 4 other targets, which was announced by our honorable Prime Minister in COP26. So we are basically targeting to achieve uh, non-fossil energy capacity by 500 gigawatt by 2030 to meet 50% of energy requirement from renewable energy by 2030, to reduce the total projected carbon emission by 1 billion tons from now onwards till 2020, and to reduce the carbon intensity of the economy by less than 45%. So these are the some targets set by the country for us. And SIDBI being a public sector organization, we are uh, bound by these targets. Uh, Various entities have estimated the financing potential, the amount of sustainable finance required to achieve net zero targets. One estimate says that we require around USD 10 trillion to our net zero targets. Similarly, sectoral targets estimations have also been done. For energy efficiency, 90,000 crores of rupees are required. Electric vehicles, government has launched a mission EV 30 at the rate 30. So by 2030, government is expecting 30% transition to electric vehicle. So for around 27 crore vehicles are there at present. So around 9 crore vehicles are required, electric vehicles by 2030, and this basically this requires finance to the tune of USD 2.206 billion. Similarly, now compressed biogas sector is also one of the key sector, which and the municipal solid waste. There also substantial funding is required. And similarly, our union budget for this year was also focused on green growth. So there were various terms which were used: green energy, green farming, green mobility, green building, etc. SIDBI has already launched, sorry, government has already launched a green hydrogen mission, uh, and also a green credit program has been announced. RBI has also launched a green deposit scheme wherein deposits can be raised by the banking institutions and can be utilized for green activities. Similarly, recently cabinet has approved a rupees 56,000 crore so there's a lot of, I mean, activity happening around. And we basically, SIDBI is serving the sector which is a very important sector of Indian economy. Uh, this is micro, small, and medium enterprise sector. So there are more than 63 million MSMEs in the country. These provide largest
We don't hear well, Rajiv. I think there is a connection issue.
employment after agriculture, and in MSME sector is form a critical part of the entire supply chain. 45% of total. Yeah, can you hear me?
We were losing you out for a few seconds in between, but I think you're back now.
Okay, okay. Now you can.
Yeah, yeah, no.
Okay, okay. So this is a very important sector which should be serving the MSME sector, and around more than 90% of the total industries or industrial enterprises in the country belong to this sector. And these MSMEs consume lot of energy and generate lot of greenhouse gas emissions because of certain challenges. These are small enterprises which are being managed by either one person or a very few person. So there's lot of opportunity for this MSME sector to transit from non-green to greener activities, and SIDBI is basically focusing on that. Just briefly about SIDBI. SIDBI was set up in by an act of Parliament of Government of India in 1990, and, and our mandate is to act as a principal financial institution for promotion, financing, and development of MSME sector. So this mandate we are serving by way of various activities. Out of the total book size of around rupees 4 lakh crore, uh, 85% is towards indirect financing, wherein we are providing refinance to banks, SFBs, NBFCs, MFIs, etc. We also operate a fund of rupees 10,000 crores, wherein we are providing funds to alternate investment funds so that these can be channelized then to the startups. And now India has become number three in the startup ecosystem. We also conduct a lot of promotion and developmental activities to basically not only to create new entrepreneurs but also to support the existing entrepreneurs so that they so as to create skill within them, providing sensitization, provide linkage to market, etc., is being done through this. We also provide directly. In fact, SIDBI is one of the few DFIs in the world who is also engaged in direct funding to the MSMEs. So we provide direct financing also to the MSMEs, and green financing within the direct financing is one of the core activities of SIDBI. So within the green offerings, we provide financial as well as non-financial products. So uh, the objective is basically we have got a three-pronged approach. First is credit. So our financial products also provide certain credit plus activities uh, like handholding support, detailed energy audits, etc. And we also enable the ecosystem, and by doing a lot of activities with regard to providing sensitization and awareness creation, and also doing activities in clusters. Third piece is basically we also encourage other banks and NBFC to lend to these sectors, to green sectors, because I mean, as Paul was also mentioning, majority of the banking sector is presently active in the renewable energy space, solar and wind. But there are other components where banking sector is not very active. So through our resharing facilities, wherein we provide guarantee for the loan given by the banks to certain kind of projects, uh, we are encouraging the banks to lend to those sectors. So we are already uh, have launched a program to become carbon neutral by December 2024. We do a lot of cluster development initiative wherein we pick artisan and micro clusters and run a TA based technical assistance based program so as to provide them awareness, sensitization, and also help hand holding them to implement green measures. So we are running similar programs in various clusters in India. We have launched certain platforms with the French Development Agency and Shakti Foundation called GIFS. GIFS is Greening Indian Financial System. So within this finance platform, we are bringing all the actors together, and they and deliberations are held on various issues related to green financing. Similarly, we have recently created a Grow platform, which is green financing for women. So again, we are bringing this platform is bringing women entrepreneurs, and basically helping them by providing mentoring support and other facilitation support to uh, become more greener and do the green transition within their enterprises. SIDBI has also launched a sustainability perception index. So, with the along with Dun and Bradstreet, and this perception index is basically quarterly survey in various clusters with regard to the perception of the MSMEs on sustainability issues. So presently we have seen that on a scale of 100 it is around 46 or something. So which indicates that lot more activity needs to be done with regard to sustainable financing. Currently we are focusing on these five theme areas. Energy efficiency is one of the major focus area, renewable energy, waste management, e-mobility, and other any other activity which leads to better environment. We have already channelized financing for these kind of green projects of around USD 1.7 billion, and which has supported more than 52,000 beneficiaries. So I think I've already covered. We have launched this sustainability perception index. We have already seen three reports, 3 quarter reports have already come out, and the in- the result is basically shows that a lot of activity needs to be done in the MSME sector with regard to sustainability and green financing. EV is again one of the major sector e-mobility wherein SIDBI is pitching in. We uh, have started a program for financing to fleet operators and aggregators, and also we are providing funding financing support to NBFCs who are actively financing the EVs in the market. And so this is one other program. It's a risk-sharing facility for energy efficiency projects implemented through energy service companies, ESCOs. So, I mean, it's a World Bank funded program. Total program size is 43 million US dollar, and the it has a TA component of 6 million US dollar and a risk sharing facility corpus of 37 million. And out of from this, we are basically guaranteeing the energy efficiency projects sanctioned by banks, and we are also handholding the banks in appraising those projects, and we have already covered more than 70 projects so far, and this facility has been leveraged 4 times, and the World Bank has now basically they are trying to replicate this kind of project in various other countries, Indonesia, Vietnam, Sri Lanka, Bangladesh, etc. So they are taking these learnings and trying to replicate this kind of project in other country, various other countries. We are working with almost every bilateral and multilateral, World Bank, IFC, ADB, KfW, AFD. So we are availing lines of credits and other facilities for running operating these green schemes. And SIDBI is also very active in the international cooperation, and we are a founder member of International Development Finance Club. It's a basically club of around I think for 30 to 35 development finance banks across the world. And Montreal Gap Group is again a group of DFIs across the world. And HFIAP is the DFI Association of DFI in the Asia Pacific. We are very actively engaged in all three. In fact, in IDFC, we are the co-chair of the climate working group. We are also engaging locally with the Indian Banks Association, and SIDBI is co-chairing the ESG working group within the IBA, and our chairman is chairing that working group on the environment, social, and governance (ESG). We are basically working on various other risk sharing facilities on like e-mobility, CBG, etc. through with World Bank and ADB. We are in fact in discussion with KfW and AFD for lines of credit. We are also an accredited entity of Green Climate Fund for raising resources for the country, and we are in fact in advanced stage of discussion of at least 5 projects with Green Climate Fund. So, and green bond also, so far we have not raised any green bond as an institution, but we are actively considering this also to raise green bonds. SIDBI, as you may be aware, we are a AAA rated entity, and we we have been able to raise resources internationally as well as domestically at very good rates. So far need was not felt, but since we have to expand these green activities significantly, so that's why we are now actively considering raising green bonds also. So with this, thank you very much. I'll stop here. I'll take on the questions, if any.
Thank you, sir. Thank you so much for providing these insights. I think you also said that you will be looking for raising the green bonds also. So that I think we will come back for that discussion.
Yeah.
Yeah. So over to Chandran.
Yeah, thank you, Mr. Rajiv Kumar. Now I am inviting Mr. Nishit Nirav. Mr. Nishit Nirav is the head of India and South Korea business development at Luxembourg Stock Exchange and Japan. Prior to joining Luxembourg Stock Exchange, Nishit worked at Regis TR, a joint venture between Deutsche Börse and BME6 Groups and Europe's leading trade repository, where he carried out a number of functions centered on product management, relationship management, and business development. Over to you, Mr. Nishit.
Thank you, Channa. Thank you so much for the introduction. I'll just quickly share my slides so that we can go through that quickly.
Anybody having questions can keep posting in the chat box. We will take the questions at the end of the session.
Are you able to see the slides?
Yes, yes.
Yes, yes.
So let me take you to a short journey of the Luxembourg Stock Exchange, how we operate, what we do, and what is our business. Actually, when you say stocks, in your mind it comes that it's about equity trading, which is normally lots of stock exchanges are famous for. But unlike us, we are a different kind of exchange. We do have stocks, we do have equities, but actually, as you know, Luxembourg is a very small country, and such as the domestic market is not so big. So if we only focus on equity trading, we can go back home at 10 o'clock in the morning. That's how it is. But we are an exchange of securities. So our specialization is about debt securities. As we will go on, I'll shed some more light on that. We have been around for 95 years, more or less. So since 1928. Not the best year to start because, as you remember, there was the financial crisis at the time. But actually, our business took off in 1963 when the first Eurobond was listed. So Eurobond is a bond which is when you raise US dollars outside of US market. Let me just go. In 1963, the first Eurobond was listed by an Italian company which is called Autostrade, which builds highways in Italy. And that's where our journey started. Since then, it's been 60 years that we have been the leading stock exchange for listing of debt securities. Mr. Rajiv, he's from SIDBI, and if I'm not wrong, SIDBI is the wholly owned subsidiary of IDBI, and IDBI also listed their first bond with Luxembourg Stock Exchange outside of India back in 1989. So over the course of the years, we have been, let's say, an innovative exchange. We listed the first global depository receipt in Europe, which was from Samsung. We listed the first green bond, as Paul mentioned, the climate awareness bond by EIB, the first sukuk from Malaysia, which was listed on Luxembourg Stock Exchange, first green bond from World Bank, then so on and so forth. You will see this is what we have done over the years. So today we list about 41,000 plus securities. 85% of that is debt security, so international debt security, denominated in more than 70 currencies, coming from about 2,000 issuers. And we are also called as the exchange of sovereigns. So over the years, sovereigns, they also picked up the pace and started listing their bonds outside of their own jurisdiction, and their choice of exchange listing venue was Luxembourg Stock Exchange always. Also, if you consider supranational issuers, except one, which is the New Development Bank, all the supranationals across the globe, they list their bonds with us to raise capital. In terms of our client base, 70% of that comes from Europe, 7% from Asia, 12% from LATAM, and then 9% from America, and some parts from APAC as well, from Australia. If I look at India, previously in the past, we did not have the allowance of FDIs in India. Recently, the laws have changed, and the foreign direct investment is quite easy in India. But in the past, the countries used to list their global depository receipts outside of India. So, you can see the names such as Reliance, Ambuja Cement, Aditya Birla Group, all these big conglomerates. They were listing their equity to raise foreign currency at Luxembourg Stock Exchange. Today, we have more than 30 issuers who are listing their global depository receipts in India, in Luxembourg Stock Exchange, sorry. And we also have some debt securities. So for example, State Bank of India, they listed their 650 million USD green bond with us a couple of years ago. We have Power Finance Corporation, which is one of the biggest public sector company in India. They listed their 300 million euro green bond last year. And we also have Reliance Industry, who's listing their $3 billion plain vanilla bond, actually, at Luxembourg Stock Exchange. We also have other, let's say, supranational agencies such as World Bank, IFC, EBRD, IBRD, etc., who list their rupee-denominated bond on Luxembourg Stock Exchange. So, as I said, all the supranationals and sovereigns, they consider listing their bonds at Luxembourg Stock Exchange. More on India, a couple of years ago, we signed an MOU with India International Exchange, which is the subsidiary of Bombay Stock Exchange and based out of Gift City, which is a new developing financial center in India. We also signed an MOU with State Bank of India. Then last year, we went on to take a next step with India INX and signed a cooperation agreement with the India INX. The basis of this cooperation agreement is to enable Indian issuers to tap into European or international investor base through Luxembourg Stock Exchange. So here they can actually dual list their green bonds, especially, well, they can list any bond, but our focus is to promote sustainable finance in India. So they can dual list their green bond via India INX at Luxembourg Stock Exchange and tap into international investor base. So that's been the rationale behind these partnerships so far. Same, we have been working with SBI to provide them information if ever needed. In the same way, they always help us to tap into Indian market. And yeah, this has been working quite well with the Indian institutions. I'll just keep you from the boring parts, but maybe a bit of background on the markets that we handle. So we have the traditional market in the EU, which is called the EU regulated market. And under this market, this one comes with all the heavy regulations that you can imagine in Europe. So you have the market abuse regulation, the transparency directive, the MiFID II laws and regulations. Whenever a security is listed on this market, you have to comply with all these regulations, with disclosures, etc. The advantage of this market is that once you have listed your security on this market, you can actually address all the retail investors across Europe, so across all the 27 EU countries. The prospectus, the documentation that you have to provide to list your security is approved by the local regulator, which is CSSF, the Luxembourg Financial Sector Regulator. Then there is another market that we handle, which is called the Euro MTF market. this is a market where it is regulated by the stock exchange, so by ourselves. So the regulation which is applicable here is the market abuse regulation and the MiFID II laws, but you don't have, let's say, for example, prospectus regulation applicable to this market, because the prospectus and the documentation which you will provide for listing your security is approved by the stock exchange. So we are governing these documents. One difference also is that you have to comply with IFRS international standards to report your accounting standards when you're listing on regulated market. But when you come to the EuroMTF market, you can use your local accounting principles, which, for example, could be different in different countries. So that's one advantage. You have much faster approval process and approval timing. If ever anyone is interested, we can go into details, but I will keep you from the boring part of this because it can be very lengthy. One interesting thing that we have, a unique thing in Luxembourg, we have something called securities official list. And under this market, you can list your security at Luxembourg Stock Exchange, but it will not be admitted to trading. So for example, why would you do that? Maybe you just want to have your security listed and be visible to the international investor base so that, you know, the documentation is approved by the stock exchange. So you have a kind of a stamp that everything is legit. And this option is used by a number of non-European issuers. So such as State Bank of India, they're using this market to show their green bond on the international community. Same for Power Finance Corporation. And yeah, this is what the markets look like. If you need more details, please get back to me. Happy to help with that. Let's skip these parts and move to something which is called Luxembourg Green Exchange. I think Paul has brilliantly provided insights on the global landscape and the Indian landscape of sustainable finance. But I'll maybe deep dive into what we do at Luxembourg Stock Exchange. So as Paul said, in 2007, the climate awareness bond was issued by EIB, and then after that, a green bond by World Bank. And both of these bonds were listed at Luxembourg Stock Exchange. Also, historically, all these development banks have been listing their bonds at Luxembourg Stock Exchange. So at the time, when the Paris Agreement was signed, we had about more or less 80 green bonds or like bonds on our stock exchange. And we decided to launch something called Luxembourg Green Exchange, where we will only display sustainable securities, so green, social, sustainability, and sustainability-linked bonds. On this platform, we also said that in the market, all the standards and principles are voluntary, but we decided to make them mandatory. So you have to provide, for example, a framework which is aligned to international standards, ICMA or whatever which is internationally recognized. You have to also provide all the reporting on back of it. So you have to commit. So of course, your framework has to be reviewed by an SPO, second party reviewer. You have to also commit to reporting. Mostly across the globe, what we see is that the stock exchanges, they do admit the bonds, but they never impose the commitment to reporting. What we did differently in our stock exchange, we imposed the commitment to reporting. So you do need to provide an impact report. You do need to provide an allocation report on yearly or bi-yearly basis as you actually set the pace. So at the time we had about 80 bonds, but today I would just skip some slides. Today we have about 1,700 plus label bonds. So all these green, social, sustainability, etc. bonds denominated in 42 different currencies. And on the other side, in total, we have 3,400 plus securities. So 1,700 plus bonds, but on the other side, you also have ESG funds. So Article 8, Article 9 funds under the E regulation. So on one side, you have the issuer side, and on the other side are the people who are investing in these bonds. So you have the whole community in one place. In total, so far, more than $1 trillion have been issued on this platform and displayed. Also, last year, we signed and memorandum of understanding with UN Women to promote something called gender-focused bonds. So we launched a new window where we only display those securities which are partly or fully allocating their proceeds to promote gender equality, or have set KPIs in their documentation that they will promote gender equality and are reporting on that basis. So this is something we have done in last year, and we have total of around 50 odd bonds flagged as a gender-focused bond on our platform. So just to avoid confusion, Luxembourg Green Exchange is not a separate exchange in itself. It's a platform. So first you will have to list your bond on Luxembourg Stock Exchange. If you have all the documentation in place, and we will check that for you, the framework, the SPO, the reporting, which will come later on, but you need to commit for reporting. Then your security will be displayed on Luxembourg Green Exchange. All the documentation will be available to the investor side for free. All the nitty-gritties, the granular details are available on our website free of cost. So that's something which differentiates us from most of the stock exchange across the globe. LGX Academy, this is something for which we have partnered with Crystal. We have been in talks since last year, and finally we concluded our partnership program last month, and now we have started being operational. LGX Academy is something we launched more or less 3 years ago. So we saw that there's a big gap in education in the market. So people are talking about sustainable finance, but they are kind of lost what to do and how to do. Of course, the supranationals and development banks, they have been in the game since the beginning, so they know what to do and how. But corporates, for example, for other banking institutions which are not so matured in this segment, have to be trained. Law firms have to be trained. Investment banks have to be trained. So we launched this course, which is actually made for all these kind of professionals who want to jump into sustainable finance or want to learn more about sustainable finance. So as Shanley has mentioned several times, there's a brochure, etc. on the chat. You can have a look at that. So I'm not going to bore you with the details. It's all better explained than this slide there. So I'll just skip that. LGX Data Hub, we saw that we have all this documentation of green bonds, social bonds, etc. sitting with us, but this data is not utilized. So what we did, we took all the bonds from across the globe, so all the sustainable bonds from all across the globe listed on different stock exchanges. And we took out information and we put them into 150 plus data fields so that you can actually play with the data. You can actually use the data for investment purposes. You can use the data for reporting purposes. And this data hub contains more than 12,000 sustainable bonds from all across the globe. Historic, outstanding, everything. And you can, this is used mostly by asset managers, fund managers, people who would like to use the data for reporting purposes, so issuers as well. So this is something we have developed over the last couple of years, and it has been used widely by our investor base across the globe. So there's something, if anybody interested, we are happy to arrange a call and deep dive through that. Last but not the least, this is LGX Assistance Services. We also saw that the issuers are struggling a lot with their framework, with their reporting, and what they're lacking is, not having, they have maybe something that they should be showing to the investor base, but they're not actually knowing what to show exactly. So we are sitting in between the issuers and the investors, and we know what issuers are not showing and what investors wants to see. So we developed a service, which is assistance services, where we help first-time issuers or let's say nascent issuers to develop more their framework, develop more their reporting capacity, to better their reporting, to add those KPIs that the investors want to see and the issuers are not showing. So this is something we have done for a number of companies, mostly corporates, also some banking institutions, but mostly corporates who don't have the expertise in this side of things. So I'll just stop here for now. And these are the green bond issuers that we have from all across the globe. I think on the slide you might see a number of different familiar names, social bond issuers, sustainability bond issuers, and yeah, over last let's say since we have launched the Green Exchange, we have received a number of awards. So we have been the best exchange over the years for the green platform. Only last year we did not win, and this year again we won the prize. So we have had recognition from United Nations, from environmental finance, and a number of different institutions across the globe. If you would like to see the market share that we have today, so if you go to international debt securities, every bond that is issued across the globe, internationally, every third bond actually is listed on Luxembourg Stock Exchange, because today we have a 33% market share from all across the globe. The next one which comes to us is London, then Ireland. So as I said, this is our specialty listing of debt securities. If we go to sustainable finance side, so every green, social, or sustainability linked bond issued across the globe, every second of them is listed on our stock exchange. Today, our market share is nearly 40%. It used to be 60% a couple of years ago, but the market is expanding. We are having more and more issuances, more issuers coming into the market, which is a very good thing. And yeah, so that's where we stand on sustainable finance side. If you go to sovereign, supranationals, and agencies, so our market share is about 45% for every issuance, every international issuance across the globe of debt security. And yeah, this is where I will stop, and let me just stop sharing my screen. But yeah, happy to take any questions that you may have.
Thank you, Nishit. Thank you so much. This is impressive. It says every third bond is from Luxembourg Stock Exchange. So that's incredible. Actually, I came to know for the first time this one. So now you heard that what exactly the Luxembourg Stock Exchange is and how the green bond and social bonds they stand, how exactly the industries and businesses across the world, they are valuing green bonds. Chandana, can you unmute yourself? Okay, so now we have the speaker, Mr. Shreyas Jaisimha. But before that, I would like to launch a poll. I think it will just take 2 minutes to go through. With the permission of Shreyas, I'll just take your 2 minutes, Shreyas. I know we are just very much on your time, probably just stepping into. So the poll is out here. There are 8 questions. If you can just say yes, no, or not sure, I think that would be great. Can everybody see the polls on their screens?
Yes, Shalini.
It is just, I think it will just take 1 minute. Can everyone reply over there? So I'll just read out the questions so that it is easy. I have not seen the answers coming out yet. Can everybody please, let me know if you are unable to see. But the questions are like, is the sustainable finance a need of the time today? A very, very nice, very basic question. Second question is, are you new to the sustainable finance? Third question is the sustainable finance core of your profession? I can see around 67%, 50% people are saying that it's a core of their business. Fourth question is, have you undergone any training program on sustainable finance? 20%, 17% of people said yes, 63% said no. Are you willing to learn about sustainable finance, carbon credits, sustainable and social bonds? Almost 100% people, they are saying yes. Carbon market, green credit market is emerging in India. In this scenario, would you like to build your career in sustainable finance? I can see 100% of people are saying yes on this. Luxembourg Green Exchange and Crystal is organizing a training program on sustainable finance throughout October. Would you like to be the part of it? I can see 71% of the people, they said yes on this. So please check out the brochure and registration form on the chat box, or just email on academy@crystal.in. And the last question is, would you like to send an email on academy@crystal.in for more information? We can see 86% of people, they are saying yes to it. So with this, the poll is ended and we are just sharing the result. It will be there with everyone. Over to you, Shreyas. Chandana, over to you first to introduce our speaker first.
Yeah. I'm inviting Mr. Shreyas Jayasimha. Shreyas Jayasimha is an advocate, arbitrator, and trained mediator from Arnala firm. He is the founding partner of Arnala. Shreyas is a member of Foundation for International Arbitration Advocacy, Geneva. He is also the UNCITRA's national coordinator for the Committee of India, and Shreyas is the only India-based representative of the ICC Fraudnet, which formed the Asset Recovery Group India. Agree. Over to you, Mr. Shreyas.
Thank you. Many congratulations to Shalini, Paul, and everyone else on this panel. Nishit, Mr. Rajiv Kumar, you are the change makers, and that the world needs more of. And what is the role of lawyers? And in particular, what's the role of a dispute resolution lawyer? Well, we are not called the second oldest profession in the world for nothing. And they say that you can't even build a bridge. I see a photo of a beautiful bridge behind Paul. I wonder how many disputes were there in the construction of that one bridge. I see a beautiful city behind Nishit. I wonder how many disputes took place to build that beautiful city. Now, we have a luxury of time when building bridges, building cities in the past. But do we really have that luxury of time when it comes to the projects that impact the positive environmental impact that all your brilliant ideas ultimately have in mind? I want to propose that we need an accelerated approach. The old approaches of let's wait and watch, let's be reactive to where the friction points are, simply will not do, because all of the time, energy, and resources that go into resolving disputes is immense and is a terrible distraction from the impact that green finance projects hope to achieve. So let me quickly tell you that I'm not the only person drawing these links. There have been, from the time of the most recently, let me take off from the IPCC special report in 2018 onwards. But even before that, there have been references, but I'll stick to the 2018 onwards timeline, when the sense of urgency was noted by all actors, quantifying the global warming levels of 1.5 centigrade, and then noting that all stakeholders, public and private, multilateral, supranational, have to really align their objectives to ensure the on-ground outcomes that these documents of intention have in mind. So straight next to the Paris Agreement, and then which then contemplates several contracts in relation to the UNFCCC. I've been involved in some consultations with the dispute resolution mechanisms that are appropriate for agreements within the UNFCCC itself. For example, there is a arbitration mechanism. There's also a mediation conciliation mechanism. And these are all to be put to use urgently and by experts. I want to therefore ask you to take an interest in the processes of dispute resolution, because for too long, the process of dispute resolution has been left to lawyers and judges. It's just like health has been left to doctors. These are the process of justice making is a social priority. It is a priority of everybody, not merely the profiteering that is assigned to one profession. You cannot say that health is a priority of the pharmaceutical industry and the medical profession. Health is an imperative for all. Now, similarly, climate justice is an imperative for all. and the idea of people getting motivated. So in fact, my immediate audience is the eminent speakers and participants here and now, not so much the YouTube audience that will follow thereafter. I would like to address my compatriots on this panel to say, urge you to please personally take an interest in the processes of arbitration and mediation. And in your training materials that were presented just now, I did not yet see a division, an aspect or a capsule on identification of conflicts and resolution and early identification, early warning systems of conflicts, and what can be done to appropriately address them. So I would urge you to please look at that aspect as well. And just to give you a few hypotheticals, what are the kind of disputes we're talking about? The ICC Commission on Arbitration and ADR issued a report in November of 2019, identifying even then several hypotheticals. One, I'll just rush through them so that you have a little more color. One could be, for example, a wind farm project and having a technical specifications dispute as to whether the project on ground is conforming to the technical specifications that had attracted funding. Second is whether a green funding financing a project had certain unapproved end users. Now, these are all very common matters that we are seeing in other areas of finance. And human behavior does not radically alter merely because you're talking about green finance. So just as we have seen repeated abuse of financial products in other sectors, we want to identify early on behavior patterns which are concerning, because obviously the opportunity cost of a misapplication of end use of a green fund is immense, because it would have been far better applied if these objectives were achieved in a different project which was more conscientious about end use applications. Another could be, for example, delays. Many of these are infrastructure projects, which are the end use project. And the biggest issue in infrastructure project is the question of delay. And how do you then compute and attribute elements of delay, whether it is to the contractor, the project manager, the project owner, and perhaps even the financier in not being able to disburse amounts in time and tranches in time as promised. There could be, we've seen the slides earlier on EVs, but there have been global supply chain hiccups, not merely because of COVID, but also of geopolitical tensions. And so what does it mean to have then shortages in supply chains and their domino effect on the green and sustainable finance projects is something that also should be considered. And even amongst those funds, should you then consider rating because you have so many hundreds and thousands of these funds that you are seeing listed in these exchanges? I wonder if Mr. Nishit and Mr. Paul can conceive of a measure to say, just as if those funds are anticipating proactively governance related matters, and in the application of their funds, that might actually be a competitive advantage between one fund and another, not merely by geography, not merely by industry, but also in their awareness, in their governance awareness, and in how proactive they are in an early resolution and making sure that the cash flow is not interrupted. And these may also be competitive advantages that market actors might wish to explore. There may be price revision issues. There may be also affected population mitigation claims, including mass claims. For example, I saw the number of matters in, I think, the slide that Nishit showed that pertain to renewable energy that is listed in the Luxembourg Exchange. Now, there is actually a big debate as to whether renewable energy projects, not all, but some of them, and far too many of them actually, could be in conflict with conservation imperatives. In the name of renewable energy, you have seen many forest lands being taken over. In the name of renewable energy, you have seen many sensitive ecosystems being impacted. So there is a very distinct and discernible fault line between the imperatives of conservation and the kind of blasé approach that earlier projects in renewable energy had taken. And so, again, the sensitivity that is shown to these and the element of prescience and applying the existing data from other industries and to avoid these conflicts in the creation and execution of these funds will go a very, very long way to achieve common objectives. There may also be environmental claims against states, and we have already seen that. We've seen sovereign bonds which have been subject to bilateral investment treaty claims under the ICSID convention before under the Washington Convention. But in short, what are the options that people have? People have the options of direct negotiation. They have the option of expert determination, acknowledging and appointing an expert and say that we'll abide by the finding of that expert. They may have the object of a dispute resolution board, such as the bridges and the city disputes, where infrastructure disputes, where they recognize early on that there should be a dispute, there will be disputes, and let us then put in place a body that will then deal with it. So then what should be the composition of that body? So can we then identify early on what should be the composition of, let's say, a fund that is investing in a sector, let's say solar, and let's say in a particular region? What is the kind of proactive approaches that can be taken to ensure that there is a board that is in place? Or if other things fail, the more traditional instruments exist of arbitration by party appointed experts, and you may also have, of course, mediation, which is exemplified by the Singapore Convention. In anticipation of this, many arbitral institutions have started issuing environmental rules. For example, the Permanent Court of Arbitration at The Hague has come up with its environmental rules, and there are also rules from the ICC and other bodies that are worth looking at. Finally, I just want to say that the only way to achieve the objectives is by entering into contracts, entering into treaties and entering into contracts. This is the architecture through which the good intentions are going to be seen on ground. So when you have this intellectual architecture that is known, that there are level of treaties, then there may be there may be regional arrangements, and then there will be constitutions, and then there are then statutory frameworks under the constitutions, and ultimately there will be contracts that will be in place between states and funds, between project owners, between banks, and ultimately contractors on ground. If we understand this architecture, then we're able to see that the contribution agreements, the accreditation master agreements, the contracts involving adaptation fund for distribution of funds, readiness support agreements, grant agreements, all of these are potential fissure points. And therefore, a proactive approach taken now by Luxembourg and Krystahl by involving me, the black sheep amongst your unicorns who are changing the world. I hope that this will translate to a more deeper and more proactive engagement, which will allow for better dispute avoidance and resolution in relation to green finance and climate change. Thank you for the opportunity. Namaste.
Thank you, Shreyas. Thank you for pointing out the areas. Generally, we don't see these areas for sure, as you said. And when there is time, then people realize that, as you gave an example of wind farm and all, for sure, there are a lot of different kind of industries, different kind of businesses, and the way they operate is really different. With this, we are at the end of the webinar. Before we go for the vote of thanks, I will just have a look on the questions, if there are any.
Yeah, hi, Shalini. I had put one.
Yes, you put one. Karen, can you ask your question directly? Yeah.
Do you want to read out or should I?
Should I read out or you want to read out yours?
I just quite a maybe ask. I think, I think every time, just now what Shreyas was just talking about, right? At the end of the day, yes, there's a lot of ESG reporting happening. And of course, there's a lot of intense amount of work that goes on in terms of, making sure that all the, checklist is ticked right at the end of the day, but it still doesn't give you the insight that what Shreyas was talking about just now. So I was just asking if there are any frameworks that actually bring together these issues of policies, of procurement, of how does it link to the entire ecosystem and what does it do, right? Because it starts on policy. It's not just about implementation on the ground, right? So how much of that is really brought all together? Anybody? I mean, it's open to anybody, but yeah.
So basically, if you're saying that everything, if it is brought together for the public to have a view on what exactly the sustainable finance is or what the green investment amounts to, I think SEBI has done a good work in bringing the framework of environment, social and governance impact assessment that in India we see as BRSR, business responsibility and sustainability reporting. But of course, there are various frameworks in similar manner in different countries that are there. So that brings together environment, social, and governance, all the three aspects, vis-a-vis the investment as such. I think if any of the speaker, if they want to add on it.
Yeah, I would like to add here. Like presently, we have this BRSR and BRSR Lite version, which are sort of approved. But for MSMEs, there is no specific framework as of now. In BRSR, uh, I think it will not serve the purposes of MSMEs because MSMEs need a simpler version which can work with them. We are in fact experimenting uh, 3-4 frameworks with DNB, with one or two other agencies also who have got this kind of ESG frameworks, and internationally they are working on those frameworks. So we are basically developing uh, uh, in- with them indigenized version of those frameworks, and we are now basically doing a pilot with around 250 units, MSME units each, on those frameworks, so that we can further fine tune and make it more better, uh, to so that it can serve the MSME sector. Yeah.
Okay. I think this was the question somebody was asking. What are the challenges for MSMEs of India to come up with the ESG reporting? What is the one global framework which is recommended for MSMEs? I think Rajiv sir has already answered this. So somebody asked you specifically, sir, about this.
Okay.
But I would like to share that we are working with some of the MSMEs and some of the hospitals, in fact, with the BRSR Lite version. And it is already streamlining quite a lot of things. We will not say that MSMEs will need so comprehensive thing, so detailed. And I think BRSR Lite has taken care of that. So if you see full version of BRSR, it is very much detailed. It is asking about all the scope of emissions and supply chains and everything. Whereas BRSR Lite is not asking that much of detail. So I think try using that also. And we have developed even the software on which we work for the companies. We have not opened up for the people to start using BRSR Lite directly. But if required, I think if somebody want to work on it, we can extend some of the trial version. As Rajiv Kumar sir said that they are doing the pilot. I think doing the pilot with 250 companies on a hard copy, that will really take time. But if you do the soft version, the software that we have developed for BRSR Lite, I think it will hardly take 1 month of time to really streamline the data over there. So next question, what we are having here is from one of the participants. He asked, is the training program designed for individuals or organizations? So this training program is for both. Individuals can also attend and the organizations also can attend. For individuals, they have to do the registration individually with their detail, and the organization, they can be nominated by the organization as such. you.